Silver is cracking on the chart, but the bigger danger is what sits behind it. Subscribe for daily updates. I'm John A.G. Today, this is not a comfort update. This is a pressure update. Silver is sitting in the low 70s after failing to hold its push above the 50-day moving average. That makes the prior breakout look less clean and more like a bull trap. Now traders are watching support. First, the high 60s. Then, if selling accelerates, the 200-day area near the low 60s. Some are even watching a possible deeper retest toward 50. But remember, these are zones, not promises. A breakdown can damage sentiment without destroying the long-term silver case. That is the key difference. Short-term, silver is being hit by technical selling, algorithms, futures positioning, headlines, oil pressure, and Fed expectations. When oil jumps above $100, inflation fear rises. But markets may then think the Fed cannot cut, rates stay higher, the dollar holds stronger, and metals get pressured. That looks backward, but that is how short-term trading often works. Long-term, the story is different. China's silver imports were reported near 836 tons in March, a record surge tied to investor demand and solar use. Shanghai premiums still matter because they show physical demand underneath Western paper weakness. Oil is another pressure point. WTI has been back above $100, while Hormuz disruption keeps supply fear alive. Oil affects transport, fertilizer, food, mining costs, inflation psychology, and politics. That is why silver, miners, and gold can all swing hard on the same headline. The UAE leaving OPEC effective May 1 also matters. It gives Abu Dhabi more output flexibility, but it also shows strain inside the old oil structure. Talk of dollar swap lines and Fed liquidity adds another layer. A swap line is not classic QE, but markets may still treat emergency dollar support as liquidity. Fed assets were around $6.707 trillion on April 22nd, and the system still depends on backstops. Debt, treasury stress, and credit warnings from Henry Paulson and Jamie Dimon keep the hard asset argument alive. Miners are more fragile than metal. If silver drops while oil rises, margins get squeezed. Physical silver has no margin call, but paper trades and options can force bad decisions fast. Food security is also in this chain. Higher energy can raise fertilizer costs. Drought and wheat strength can pressure groceries. That is not panic, it is risk management. So the real question is simple. Is this a deeper silver correction or the final shakeout before the next move? Comment your level, 61, 50, or buying slowly here.